So good morning, everyone. Uh, it's a new, Sa-Dhan has always been putting together, building a bridge between the demand and the supply side. Over the period of time, we could understand that there is a bit discord in the governance issues. Many lenders and investors, they were coming back to us on the issue of governance of the microfinance institutions. I know microfinance institutions do their level best, but there may be some lapses, there may be something, and which is a concern of the lenders and investors. And the other thing which we were seeing over the period, that the technology and your internet interface and cloud and everything is coming up with a big time. And some frauds, we have also identified that there's cyber frauds are happening. So how to protect our this industry from these problems? We started working with KM and then Gomati is very kind to be in touch with us always, and we were trying to do something together. So today, we had an earlier meeting between Kem Dastur and Sa-Dhan, and we were working on this for I think at least a couple of months, and a kind of shape we could figure out that this can be probably good for the industry. Now today we would be listening in this platform. We wanted to bring together the microfinance institutions and also Kem Dastur, also Sa-Dhan, everyone, and a couple of lenders that to understand the discourse, and if we have any questions and anything we can ask. So to carry this one forward, I would like to invite Dr. P. Satish, Executive Director of Sa-Dhan, for his opening remarks and also welcoming formally everyone.
Yeah, good morning, Sa-Dhan. Thanks. I welcome all our member institutions for this e-meet on liability insurance for cyber-related risk as well as governance-related risks. This is for the microfinance sector, this is I would say, a reasonably new idea, especially for the if you exclude the very large institutions in the sector. And at the same time, I welcome our friends from and our presenters in today's meet from the student company. As we all know, as Saibal was mentioned, that we were in dialogue with Mrs. K.M. Dastu regarding these issues relating to reinsurance for the microfinance sector. And one of the things which they were suggesting is that in view of the growing issues related to governance failures on one side, and also on the increasing risk of cyber crimes, liabilities, and all. So there is a need to protect the key management personnel as well as the directors from many of these risks, in which a lot of insurance and reinsurance products will play a major part. To take us to this area and how exactly we can. So that's why we thought that we will request our friends from KM Dastur to present these ideas to a cross section of the microfinance industry, and also, as Saibal was mentioning, some of the lending institutions also, so that the microfinance sector can have an idea as to how to go about this area and also to take some of the protective steps, of which an insurance product would be also a forming part of that. So today we have Mrs. Gomati and her colleagues. They will take us through these areas, and we'll have an idea about how the sector can benefit, so that we can go ahead and decide on what is best for us, for the sector, and what are the decisions we can take with regarding to such products. Thank you, and now over to you, Saibal.
Yes, I will over it.
Take the
Thank you very much, Dr. Satish. I would be now request Gomati to take it over for the presentations and the discussion. Gomati, over to you.
Thanks a lot, Saibal, and thanks a lot, Dr. Satish. I think it's been a privilege for us in KMD to work with the Sa-Dhan team. So we always believe in the premise that all the good forces in the world should come together for a common cause. So if we look at the uncertainties in the post-pandemic world, there are a couple of things which MFIs will definitely get affected by, and prevention is always better than cure. So from that perspective, we are starting with two areas which Saibal had just discussed. Before we go there, I have the senior management team of KM Dastur as part of the session. So if I can request Vaibhav to give a quick introduction about KM Dastur as a group, and then I'll request Vijayalata and Sanjay to introduce themselves and then get started. Vaibhav, over to you.
Thanks, Gomti. Good morning, everyone. This is Vaibhav Chen. First of all, I would like to thank everyone for joining us today, and especially the Sa-Dhan team for giving this opportunity. I'll just take a minute to introduce KM Dastur. We've been there for about 5 decades now. It was formed in 1973. From a broking license, we are a competent broker. That means we are into insurance and reinsurance. We were among the first set of brokers who got the license from IRDAI. So it's been about 20 years since our licensing. As I mentioned, we are into insurance as well as reinsurance. So on the insurance side, we do have on the corporate side, on the retail segment, on the online, and of course also on the reinsurance, where we represent the insurance companies as well as GIC Re, which is the national reinsurer in India. We are present in 14. We have 14 branches in India across most of the large cities, and our group is present in about 11 countries. Our group is also a Lloyd's broker in London, so we have access to the international market through our group companies. I will not take much of time. I think let's get into the main discussion. So, yeah, thank you for joining us once again.
Thanks, Vaibhav. Vijayalata, I request you and Sanjay to give a quick introduction about yourself, and then.
Pardon, Gomti, there was some disturbance in between.
Oh, no. I told before we start the session, I thought you and Sanjay can introduce yourself to the team, and then we get into the slides.
Hi, my name is Vijayalata Ramesh. I have joined KM Dastur a few months back. I am an insurance professional with 35 years of experience. Worked in insurance companies, in insurance broking companies, in a reinsurance company, represented the client side as well. I was with, my previous assignment was with Reliance Industries Limited in their corporate insurance department. And Sanjay, I now ask Sanjay to introduce himself.
Yeah, hi everyone. Thank you, Sa-Dhan, for giving us this opportunity to meet up with you and discuss your concerns about insurance and the governance issues. My name is Sanjay Sinha. I come also from the insurance background. I have served public sector. I started my career rather with a public sector company, and then I have moved on to insurance broking. I was also heading Allianz in Sri Lanka to set up their operations there. And I have been with KM Dastur for the last 10 years, almost a decade now. And we have worked in different fields. I have not had the privilege like Vijay Lata to work on the client side, but I have seen the other three sides. So with an insurance company, with a broking company, I have worked in this industry.
Thanks a lot, Sanjay. So good morning, everyone. Just a quick introduction about myself. My name is Gomati. So I work with Vaibhav's team on the structured solutions side. So basically, I have like 25 years of experience in product management and distribution management. And the focus has always been on risk transfer structuring along with reinsurance and insurance solutions coming in. So over the last 15 years, I've worked with a reinsurer and now with a broker. I think what excites me about the Sa-Dhan possibility is here you have a segment of risk which is not very well known, and you have say a group of experts in KM Dastur who can connect the dots well at a very optimal pricing, if I can call it. So when I look at Sa-Dhan and the members of Sa-Dhan, when we talk about the governance and cyber field, it's a very specialist field. So you need a spokesperson who can negotiate on your behalf with the insurance and other risk transfer industry to put the best solution in place. That's where we think our role will make sense for you. So with that, I'm getting into the slides. What we have done in today's session is we have put together the details about what comes under a director DNO policy, directors and officers policy, which is on what happens if there is a governance failure. It can get covered under that policy. And the second one is the cyber related risk. So additionally, we have co-developed the product with the oncology platform. That will be the third one, which we will discuss about. So I again request if everyone can mute your audio so that it's a easier to discuss session. So if you give us some time, we'll just take you quickly through the slides and then open it up for the Q&A session. So today's main topic is going to be governance and cyber liability insurance for the microfinance industry sector. So if you look at what are all the key liability insurance products available for can I request
there is somebody called
to...
Silpa HR. Can you please Gomati, carry on.
Thanks, Saiba. So if we look at for any organization, there are 4 key liability policies which are required. So one is the directors and officers liability policy. Next is a professional errors and omissions liability policy. Then there is the general liability insurance, and then cyber liability insurance. So with the Sa-Dhan team, what we did was we went through what are the most relevant products at this point of time for the MFIs and the lending sector. And then we've chosen DNO and cyber probably is the most important one at this point of time, and also the most underpenetrated one when we look at this sector. So we'll first start off with the directors and officers insurance policy. So what the directors and officers policy covers is it covers for wrongful acts of when we talk about directors, all the people who are directors of the company get covered. They don't need to be named. Similarly, all the people who are officers taking decisions on the company's behalf, the wrongful acts from their side gets covered. So when we talk about wrongful act, because it's insurance and there is a contract, underlying contract, I think it's important to understand what's a wrongful act. So wrongful act will be anything like misleading statement, misrepresentation, any error or omission that happens, breach of duty, and negligence, which results in failure, governance failure from the MFI's perspective. So this cover will provide when in the case of when the DNO, that is directors and officers, are not indemnified by the company, as well as when they are already indemnified by the company. So when we talk about wrongful acts, it's again, we need to read it in together with the overall policy terms and conditions. What we are presenting here is the I would say the highlight or bullet points from the contract. So the way we design the policy is, when we talk about, this is a generic session that's happening for all of you. When we go into customized sessions with each of the MFI, we start off with particular your proposal form, details related your audited financial reports, which are taken as input when we come up with recommendations on what is a suitable cover for your organization. So in terms of coverage, I think it covers across India as well as across the world. What it pays is, it pays the defense costs, including attorneys' fees, reasonable expenses towards court attendance, and other legal representation expenses. So when we talk about defense costs, there are multiple costs involved. That's where it's important to and what it covers is the present, past, and future directors of the company. So that's why we were talking about the names of the directors will not be the most important thing. Whoever has been a past, present, and the future directors can get covered under the policy. So similarly, there are other aspects of the policy which are covered here. I think I'll probably take a pause here. Do we have questions on this? We go into details, or we cover it after covering the cyber policy as well?
Okay, I have one question. This is Lavina. I'm the company secretary and head of legal and compliance in Ananya Finance for Inclusive Growth Private Limited. So my question is that we already have a D&O insurance policy in place. As I rightly understood, it covers the past, present, and future directors, right?
Yeah.
Yeah, but I just wanted to know about KMPs. Like for KMPs also, suppose if, for example, I'm the company secretary, I'm the KMP here. And suppose if I leave the organization and there is some negligence on my part in the year 2016 or 17 when I was the company secretary at that point of time. So whether I would be covered in that case?
Slowness is there, but not.
Sanjay?
It is not very clear.
No.
Could you please?
The question is that in 2000,
But it's not happening.
2016,
Okay.
and she left, and thereafter there is a
It's not happening.
change. Yeah, she will definitely.
Yes. Definitely. See, as Gomti said, the policy covers past, present, and future directors and officers. So there is this thing coverage. Usually, what happens is it takes quite a bit of time for any litigation to be this thing to become a full-blown case. First, there may be some small intimation, and then a legal notice.
Lots of.
So it means that past KMPs are also covered, not only directors but KMPs also.
Yes, certainly.
Okay. Thank you.
Any other questions at this stage? So in addition to the coverage that we spoke about, the DNO policy can cover a lot of other the entity employment practices liability coverage is also available. Then you have the pollution claims defense cost coverage, which is covered. So probably not all organizations will require it, but this is part of the overall coverage a DNO offers. Similarly, retired directors are also covered. So that's why we spoke about past, present, and future directors and officers. So KMPs will get classified under the officers. They get the coverage as well.
See, just to add to what Gomti is saying, I would like to add here that, who are the parties who can make a claim against the company. So basically, it could be employees for employee practices, it could be shareholders, it could be creditors, it could be government regulatory bodies, it could be members of the public at large. These are the people who can actually sue the company, the directors and officers of the company, for having caused, a kind of a loss to them in discharge of their duties.
I would like to hear from Sadaf also, and Sunil is here, and Mr. Bhatt is also here. So if we can also hear from them that how are they seeing this one? Sadaf, are you there?
Yes, Saibol, I'm here. I'm understanding. I think there was a valid question that I think Ananya, company secretary, asked. I think I'm hearing that. So at the moment, I don't have any question. In case if I have, I'll definitely ask that. Thank you.
Okay. Thank you, Sadaf. And Sunil is also here from Sa-Dhan. Sunil, do you want to ask anything? My question is basically around the the validity, the liking of this product. In many cases, we are seeing that this is happening, and it will also, protect our industry. So how do you see this one? Then I will ask Mr. Bhatt to respond on this one. But Mr. Bhatt is a ex-banker, and also he is in lending institution. I would like to hear from him as well. Yes, Mr. Bhatt, please.
Thank you, Saibal. I think you've taken a good initiative in organizing this talk of understanding by the microfinance institutions about the director's liability. One thing is the apprehension is that, as Lavina was mentioning, whether the previous KMPs are covered and also previous directors are covered. That's one thing. Second thing is if foreign members are there on the board, okay, whether they are also covered and to what extent they would be covered in this type of policy. The third thing is about the, wherever now what we see in some of the accidents happen in the microfinance industry, which is termed as fraud. Maybe at that point of time, if the independent directors are there, okay, there may be one director who must have involved in this type of malfeasance. But what about the other directors? Whether they would be protected out of this policy? These are some thoughts which occurred to me. I thought I will get it clarified for the benefit of all.
Yeah.
Thank you very much. Yeah, Gomati, please.
Gomati, I'll take this question.
Sure. Please,
Yeah.
Vijay.
One thing is, of course, yes, we did confirm on the past, present, and future coverage for all the directors. The second question that you posed was, in case any foreign nationals are there on the board of directors, whether they can be covered. Yes, they can be covered. And the limit of liability is a common one. It will be floating over the company as well as the all the directors, and wherever applicable, this indemnity limit will be factored while arriving at any claim settlement or any for any incident under the policy. Then the third one is, what is the third one? About the fraud, yes, there is the involvement of one director, but what about the other directors? Yes, this policy basically will respond for any inadvertent wrongful acts done by the directors in the course of discharging their duties to the organization. But if any other director is also involved and if their inadvertent wrongful act also has this thing caused some financial loss to the other parties, yes, they would be covered.
Fraud committed by a director.
No, a fraud means a knowing, that's why I said inadvertent wrongful act. If somebody has done a deliberate wrongful act, then there is no cover available for the under the policy. Yes, but the defense cost will be paid, and till the time the person is pronounced guilty, the policy will respond. And once the court says that the person is guilty, then there won't be any coverage under the policy. This is basically meant to protect the directors and officers for any unknowingly any wrongful decisions taken on their.
See, frauds and non-compliance acts are not covered under the policy. But as long as they are proved guilty that it was a deliberate act, the defense cost will continue to be paid under the policy. So that has to be paid till the court decision is final, and that is how it happens. But an individual director implicated in a fraud case, that compensation will never be paid. And if in case any defense cost has been paid during the course of the litigation, it has to be recovered from that individual director.
The aspect is, if one director is implicated or found guilty, whether other directors would be able to get the benefit.
Yes. Yes. For any other act, yes, definitely. And even in that particular act, if there is no deliberate wrongful act that they have performed, yes, there is cover available under the policy.
Okay. Now, one more question is on the applicability of this insurance cover for the trustees of the trust. Whether KMPs of the trust and trustees of the trust would be eligible, or other non-profit entities also would be eligible for this cover.
I to understand a little bit more is who are we covering? Are we covering the trust? If we are covering the
trustees.
Hello.
The trustees that he's asking about.
See, in case of companies, it is the directors who are responsible. In case of a trust, it is the trustees who are managing the affairs of the trust.
Certainly.
In those cases, whether trustees can take because ultimately the liability is passed on to the trustees in case of trust. Whether any such insurance cover is available for the trustees.
The same cover is available, a trust can take it.
It is available?
Yes.
Are you sure?
Of course, we have given such policies as well.
Okay, thank you very much.
So if I can just add.
Hi, this is Sumit Bhojwani, Company Secretary of Midland Microfinance. I have a couple of questions, arose from this conversation. First question is, what is the TAT of response, right? Like, so you get information about something fraud happened and all the decisions are out. So what is the TAT to response that queries or response that claims first? And second, in most of the cases we have seen, whenever any government authority prosecute anyone, then they have a clear intent, the KMPs or whoever, so the directors, they don't think so it is being done inadvertently. They always consider it is done with their malicious intent and all. And unless the court's decision is out, it takes 3 to 4 years. So where do we stand in this case of your liability insurance and all?
Yeah.
That's also my question. Yes. Good question.
Okay. About the turnaround time, the way it would happen is that suppose there is an event and that gives rise to there is a typical flow in which it happens. initially there may be an intimation saying that so and so this thing, such an event has happened, and because of the wrongful act on your part, this has resulted in some loss and all that. And the second stage, maybe a legal notice is served, and then this thing, it would develop into a civil case, yeah, a full blown case. And then comes the, but the coverage starts right from the time the first intimation is received. The first intimation, whatever is received by the organization, that has to be intimated to the insurance company. And or I can even go a bit this thing earlier also. In case you know that there is an event which has happened, which has the potential to develop into a full-blown case, it has to be intimated to the insurance company, and whatever are the developments relating to the case, everything has to be communicated to the insurance company. And wherever there is a legal notice served, then the directors of the company, they have to engage their legal counsel and give a suitable reply and keep the insurance company informed. And since this is a legal matter, it happens over a period of time. And the policy picks up all your defense costs. And as I said earlier, the policy will respond till the court judgment is received. If the court gives the judgment that yes, a wrongful act has happened, but the director, this was an inadvertent wrongful act on the part of the director, and then the policy will pay for the whatever are the compensation costs as well as the defense costs. Suppose no judgment is there, it is taking a long time, then the defense costs will be reimbursed by the policy, and it will keep happening. And in case a director has been pronounced guilty, then that is the point when the cover would stop. There would be no there would be no compensation that would be paid by the insurance company for deliberate wrongful actions. And that is the point when the defense cost also would have to be returned by the respective directors to the insurance company. I think I have addressed both the points.
Yeah, just to add a few more things. I think an act of liability can arise any time. Probably the company may not be aware that something of this nature has happened. So, if they are able to detect it themselves, the first and foremost responsibility on them is to intimate to the insurer, the underwriters, that they apprehend that such a case could be coming up. A liability could arise like this. But supposing they have not been able to even foresee that such an event has happened, and they receive intimation about that liability, then immediately again they have to do the due diligence, whatever needs to be done at their internal level. They need to take all the administrative actions that needs to be done to make an inquiry into the event. But simultaneously, they need to inform the insurance company that they have received intimation of a probable liability case coming up, and that's how it should proceed. And it becomes the responsibility of the insurance company to defend that case.
No, I have a no duty to defend. Nowadays, nobody is giving. It is the right to defend. The insurance company will decide whether they want to get involved in the legal, or most of the times they will ask you only to go ahead with it. But they do have this thing. They can come in at any point of time if they feel their involvement helps.
One more follow-up question is on the violations in terms of regulatory terms and also statutory terms. Okay, if it is noticed and if it was found that it was inadvertent, and there are compounding charges levied by the regulators or the company law board. In that event, whether such things are covered under this insurance?
Civil fines which can be insured, yes, it is covered under the policy. When it comes to criminal, it goes against the public policy, so there is no coverage under the policy.
Other than criminal are covered.
Yeah, civil fines that are insured are covered.
Okay.
One more question from my side. I request first everyone in the meeting kindly mute, be on mute first. We are getting a bit disturbance.
Yeah, that's true. That's true. I'm not getting to see who is the one who needs to mute. Yeah, please carry on. Still, there is some sound.
Yes, I have a question, right? I was into a discussion with some of the High Court's advocate yesterday, where I have seen a case that there were few directors and a KMP, and they got a notice from IB, Investigation Bureau. It was some kind of CBI or CID, where they were about to be held responsible for some kind of guilty, right? And those directors were having the PRs of the foreign nations, right? And those directors run away from their places, leaving the company secretary behind to face the prosecutions and all, right? And obviously the IB will come with the intent to prosecute them, and they won't give them a chance to even inform anyone. Another thing is that when the company secretary will be held liable and he will be you know sent for questioning and all, then they won't get a chance to inform you first. Second, whenever a KMP being held responsible or for that, then the insurance company says that once the guilty is proved, then we will pay. Then he will not be able to get his lawyer or something like. So where the insurance company stands as a helping authority when the person is under the prosecution, because IB or anyone from that investigating authorities will take time. They will file the charge sheet, right? Then after filing the charge sheet, it will go to the court, right? But during that, the person is not even able to get the bail, where the insurance company stands there to help the KMPs. I think I'm done with my question. If I'm audible to you.
Yeah, we heard you. Whenever any case is there, there is always an opportunity given to the concerned person to defend himself and to put up his stand and explain. So that is where these defense costs also come in. And as you said, yes, it does take a very long time. Yes, but defense costs will be incurred regularly for a long period of time. And that is when this insurance policy will come handy. There is also a provision for advancement of defense costs. That also can be included so that the concerned director doesn't go out of pocket. Hello.
Are there, yeah, you're audible, Vijayalata. Are there any further questions? And Mr. Sumit, I don't know whether we answered your question. Was it clear from what Vijayalata just responded? So if there are no further questions, shall we move to the cyber product?
Yeah, I think that would be.
I have one question for the D&O policy. So my question is that when we take the D&O policy, the directors are covered or the KMPs are covered. I wanted to know, is there any provision wherein if there's a penalty on the company per se, so whether that is covered in the D&O, because like if I say there's some compounding application we are doing and some penalty has to be paid by the company itself. It is not on any director or KMP, but on the company. So whether there's a provision, because as far as I understand, there are 3 types of D&O: side A, side B, side C. So I'm very confused in that. I think in one of the side C, I think company is also covered.
That is a very good question. See, this side A, side B, side C, I'll just explain what it is. See, this directors and officers liability policy is taken by the company, but it covers the directors. It also covers the company. This side A, side B is there is a cover which is available ground up for the directors, which is the side A cover. Then there is a side B cover where company reimbursement is required. In case the company is going to reimburse to the directors, then that will fall under the side B section. And this side C is the entity can also be covered. Yeah, and there are, and why are there this side A and side B? Because in some cases, in most of the cases rather, the company would definitely step in and help the director as far as the defense cost and other proceedings are concerned. But yes, there may be certain cases where the management feels that the director did not act in the interest of the company, in which cases the company may not offer any kind of help. So the director is left on his own, on her own, to defend themselves. So that is when it is side A cover, and the liability that is there on the individual directors is a personal liability. The personal liability, even in the unfortunate event of death of the director, it passes on to the family. So the spouses and the next of kin and the assets also, there is a risk of the assets also getting attached. And that is why, if you look at the side A cover, there will be nil deductible under the policy. That is why I said it is a ground up coverage as far as the individual directors are concerned. And if the company steps in, then it falls under the company reimbursement, where there is always a deductible applicable. Some small deductible will be by the entity, after which the policy will respond. And side C, yes, in case there are civil fines which are levied on the management as such, that also gets covered under the policy. And side C also has some deductible, since the coverage is for the entity.
That is one of the reasons that in the corporate world, you would have seen that whenever somebody is invited to join as an outside director, the first and foremost thing they see is that whether they have a DNO policy or not. It protects the directors in their and officers in their individual capacity.
Okay, so my next question is based on the answer that suppose if we have a side B policy as of now in our company, so what do you suggest, whether we should go for side C, though the company is very compliant, we don't get such, but there are times that because the compliance is so complex right now that there's a possibility that something is missed from our end. So what do you suggest, whether it is better to take side C policy so that the company is also covered?
I'll answer. See, usually any policy will have both side A and side B.
Okay.
Side A, if the director has to arrange for all his defense, and the side B, there is no side B policy. Usually it comes as A and B only. And about side C, there are two views to it. I'll give both the views. One is by inclusion of entity into it, the cover available for the individual directors and officers, it gets eroded to a certain extent. In case there is some event which has happened and for which the management is held liable, then this side C will kick in, and whatever is the compensation that is awarded for that will erode the limit of liability which is available for the directors. That is one school of thought. The other school of thought is that yes, this in very many cases, what happens is the directors are held responsible, and along with that, the management is also held responsible. So, in which case, it covers everything. But what I can suggest is, especially in wherever employment practices liability cases are there, many times the management is also held responsible. So, it's better to include it. And just ensure that the limit of liability is somewhat adequate.
Okay, so the premium amount will increase if we go for entity also?
It depends on the type of organization. Whether it is listed, whether it is not listed, then what do the financials say? The premium is largely dependent on all of these. Then what is the sector in which this thing? Of course, here it is on MFI. And then the auditor's report is seen. How is it? Are there any adverse remarks over there?
Yeah, so that all things we anyways give every time whenever there's a renewal, they ask for all these things. So maybe premium is based on that, all those factors.
But just because of inclusion of this thing, it's not
right. Okay. Thank you so much. Thank you.
So I am Manoranjan Bishwal from IIFL Samastha Bangalore. So I'm qualified company secretary and compliance specialist. So I'm having small doubt. So here the officer means any definition is there or only director and KMP? So as per SEBI LODR regulation, so officer means we will consider our senior management. They are coming under officers, or who are the coming under officer definitions?
It's usually the Companies Act definition.
So there are the Companies Act is there, SEBI LODR regulation, those companies having debt listed. So there are also some policies we are having, so our director and senior management. So we'll consider senior management as the officer of the company. So or only director and KMP will consider.
Usually it is those directors and officers who have been empowered by the management to take decisions on behalf of the management, and overall the Companies Act is only there. There is no kind of what I have seen is that many organizations, what they do is they give the list of directors also at the time of inception of the policy, just to of course it does cover past, present, future and all that, but just as a matter of good practice, they put the list of directors and officers just to be sure that certain types of the company secretary, then the legal head, and whosoever is required, they put all the list and they submit to the insurance company. That can be done.
Okay, and second thing, this tenure of the policy, if the director or KMP or officer they are resigning, so how long it will be valid?
Lifetime.
Sorry?
Lifetime.
Okay. And we'll give this disclosure in our annual report or financial anywhere regarding this directors and officer liability insurance. So is it mandatory to give the disclosure in annual report or financial anywhere?
Yes. Annual report is the basis. First, the insurance company goes through it, and that forms, along with the proposal form, this annual report is given. On the basis of that only, they release the terms of coverage.
Okay, and last one, if you want independent director, they have been directorship in several companies. So if here in my company, I am taking insurance and he having the directorship of another 5 or 6 companies. So how actually will consider these things? So they have to take the insurance the company wise, just like X is the. Sorry?
That's having said that, I can also say that there is also a new trend which is developing, where individual directors also are asking for policies on their own. Of course, this is a new thing in the market, and not very sure whether insurance companies would give it. But yes, independent directors, they have to take the D&O policies of the various organizations on whose board they are sitting.
Okay, thank you very much.
So we move to the cyber part now.
Yeah, if anybody has any question, otherwise we can go for that. Then we will get the questions on that as well.
Sure.
Okay.
I think even for DNO, we are very happy about the participation. So keep the same thing going. We are very happy to take questions.
Yeah.
So now coming to the cyber liability insurance, I think before moving into the coverage structure, that I should mention the discussion I was having with the Sa-Dhan team, Saibal and Sunita, where they were asking about the relevance of cyber to the MFI sector as such. So two parts which are very relevant. Anywhere where data is involved, I think that it has to be covered under the product. And with all the developments that we are seeing on the data front, with various governments putting the regulations, I think there is coverage required for the MFI sector as well. And the second part is also that more and more technology coming into play when it comes to MFIs as well. So if you ask me whether cyber is a relevant coverage for MFIs, the answer is a definite yes. So when we talk about cyber coverage, we are talking about what are we protecting here? We are protecting the losses faced by the MFI after a cyber attack. So it's basically it has two parts. One is the losses that the MFI will suffer from third parties because of the cyber attack, and second thing is the business interruption which will happen because of the cyber attack. Both aspects need to get covered. So the insurance coverage is actually meant to cover the fees, expenses, legal costs associated with the cyber attack. All these things need to get covered. Plus, if we talk about data breaches that happen after the organization has undergone a cyber attack, is mainly around the theft and loss of client and employee information. So with the new regulations coming around the data loss, data theft, this is an important coverage for a MFI to look at. So there are multiple key coverages under this policy. So one is the breach event expense. Second is the public relations expense, media liability expense. So I think in the last 2 years, previously when we talk about cyber, even big organizations used to tell that, yeah, we are taken care of. We are not worried about it. But if you see the last 2 years, the number of cyber attacks and the liability which the organizations are facing, mainly post-pandemic phase, people working from home, there are a lot of threats which have started coming up, and also the resultant PR disaster which happens because it's out in the media. So all these things definitely require coverage, and all the things are covered under the cyber policy. The last one is the cyber extortion and threats. So I think if we look at the most of the ransomware threats that we have seen in the market, people taking over the company's website, asking them to pay ransom before releasing it. These are very real things in today's context. So these all things are covered by the cyber liability insurance cover. So I'll take a pause here. I think it will be good to have a similar Q&A kind of a thing for cyber as well, so that the understanding for everyone becomes uniform.
Can we have a sense of premium?
So it's entirely dependent on the organization, Mr. Bhatt.
Can you give a range?
For example, I don't know, Vijayalata, you want to?
No, it's a little bit difficult because financial institutions, the exposure, there are a lot of personal data that you are holding. There are a lot of corporate data. And now the cyber market has kind of hardened. Post-COVID, I should say, numerous incidents have occurred, and there have been numerous losses. So it wouldn't be fair on my part to comment on some kind of price. But we will ensure that we get the most competitive price, and we will approach a couple of insurers and we will present it to you. But quoting on some number, I'm slightly hesitant.
It is difficult because a lot will depend on what kind of declarations are coming in the proposal form, what kind of IT securities do you have, because if the system is very robust and if there has been no breach in the past, obviously the insurance companies will be keen to write those risks. and give them at a very, very, good price.
And depends on the condition of market. See, whatever is there at this point of time, maybe 2 months down the line, if the insurers are saddled with losses, then the market will further harden. So it's a dynamic market, it keeps changing.
So on this, if I can just add, Mr. Bhatt, I don't know what is the context, or we probably have a cyber cover already. So I assume that's.
There is an awareness required among the MFIs and other organizations to go for that. Unless they know the cost, they will not attempt to do that. Suppose if you say that, okay, it is within the range of, suppose if you want to cover, if you have a business of 50 crores, if you are to be covered, you have to pay about 10,000 rupees per year. If that sense is there, then the motivation would be there among the smaller institutions to go for that.
I second Mr. Bhatt.
By that.
Yeah, I second Mr. Bhatt. So if we are promoting anything, even in our case of governance and also this one, we have to have a kind of indicative figure to start with.
No, we do understand your point of view. What we will do is we will approach the market and we will give you a range so that it is somewhat realistic.
True.
Some indicative range we will give it.
See, based on the turnover and based on the type of risk that you foresee and the limit of indemnity that you want to cover, we can explore the market. It doesn't become binding on you. So, you will get a feel, because then we will have an option from 3-4 companies, the best in the market, and we can present it to you, and then probably you can take a call on whether you want to go ahead with it or you don't want to park it for some more time.
And it also depends on the limit of indemnity that any organization may be choosing. For example, if somebody chooses a limit like 100 crores, then the capacity for that also is kind of limited. Then we will have to approach multiple companies and stitch up a cover. So those sort of things are also involved. So we would like, we get a generic range for cyber policy rate from the market. And simultaneously, we also would like to understand what would be the limit of liability that we would like to take, maybe some broad range, so that it helps us in approaching.
So if I can just add a few more things to what Vijayalata and Sanjay mentioned, Mr. Bhatt, I mean, completely appreciate your point of view that you need to know a price range. I think when it comes to cyber insurance, 2 important aspects are there. One is how do you design the coverage structure? For example, if you see the Colonial Pipeline ransomware attack, which happened in US, the ransom demanded itself was like $40 million US. So when we talk about amounts of that sort, no premium is sufficient to fulfill the whole thing. That's the reason why Vijayalata was mentioning about how dynamic the pricing structure in this segment is. And what we have not seen in the last almost 10 years, we are seeing a lot of things in the last 2 years. So that is one aspect to it. But the second aspect is also that there are it's a very reinsurance driven segment when it comes to cyber, because a lot of fundamental foundation needs to be there, and then you have the front end, which will be the insurance company, which will provide you the cover. So here, depending on how we see the structures coming up with the Sa-Dhan members, we can design something which is suitable and also give you competitive quotes from multiple players who are the leaders in this segment.
Okay, just one point, it got left out. See, for this cyber, just as we said that the D&O policy is the rate and the terms are decided by the insurance company based on the proposal form and the financials of the company. In the same manner, for cyber liability, the insurance company also would like to have a look at the IT philosophy of the company. What structure is there in the company? What sort of protection is there in the company? Then ransomware, they got some questions there which ask for a lot of information. So generally they go through all this and then the sector which is involved and whether any attacks have happened. Based on all these things, they decide on the acceptability and then come the rate as well as the terms and conditions. For example, suppose the insurance company finds that the protection measures for IT are not acceptable, then they may not even vote for it. So this is a slightly different kind of policy. And that is why it becomes a little difficult to commit certain things upfront. Hello.
Hope the answer is clear.
Yeah. It's in the sense that, you see, what we wanted was, suppose if I'm a 50 crore company, if I were to take a cover for this one to safeguard myself from the cyber attacks and other things, what would be the premium for that? It's a simple question. You can see, okay, all other things becoming ideal things are there. I have taken necessary precautions for attacks. We have strong structures for protection and all those things. And there are no even near miss events also. In such a case, what would be the premium to have an understanding?
And get realistic range and value.
So we'll revert to you on this.
That will be fine. Yeah.
Gomti, if you kindly go to the previous slide, I have certain questions to ask. I'm Gargi from Asa, India. So how do you quantify in monetary terms if this public relation expenses, media liability, these are kind of, how do you quantify in monetary terms? This I'm not able to understand basically. Ransom fine, I can understand in this monetary terms, you're quantifying this, but there are some issues that cannot be quantified in monetary terms. So if you can focus on that, please.
You've asked $1 million question.
Thank you.
For which there is no this thing.
Yes, that this is basically tarnishing the images of organization. If somebody there is some malified intention or something like that. So I just wanted to understand that.
It's a very, very, very good question. See, when it comes to liability insurance, some kind of estimation has to be done by the organization as to what limit is required. There are companies which start with for small companies, they start with some 10 crores. Then if they are little kind of mid-size, then people go in for 25 crores option, then 50 crores option, and so on. What we can do, that is one thing. So essentially this is an estimation. And the second thing is that we can do a kind of benchmarking of limits taken by your peers in the market. So that will give you an idea. See, this organization is very similar to this thing. They have gone for it. So maybe we can take that also. And another approach which we find very often is people give some 2-3 limits and they see what the price is and then they take a call.
See, basically,
various approaches are adopted.
Basically, it depends on the nature of business that you are carrying out, then the exposure to the third party, then the turnover of the company, and also the geographical exposure. Keeping all this in mind, an estimation has to be worked out. There is no thumb rule of having a particular sum insured for any type of industry or business. So it has to be, and people normally, our experience has been that people who start for the first time go in for a very, very conventional kind of liability. They start from a lower limit of indemnity, and gradually as the business increases, or they keep experiencing some or the other type of cyber attack or something happening, then they keep on increasing it. So it has to be experienced, and then accordingly a program has to be structured.
So just adding to it, Gargi, see, PR expense, for example, if there is a data breach that's happening in your organization and it's out in the media, So you might have to employ the services of a PR firm to address the damage, and especially if you're a listed company, it's much more sensitive. So the expense incurred for that also gets covered. And as Sanjay was telling, the limit of liability, how you design it, becomes very important. So if the bigger the company, you need to have sufficient limits of liability to take care of these all expenses.
Okay, and the premium has been decided. What is the premium to take all the key coverages under this policy?
So I think the previous
or we can
discussion,
customize it.
Yeah, so I don't know whether you were just noticing the discussion we were having when Mr. Bhatt put forward the question. So it's very dependent on your balance sheet and what is the limits and what is the previous history that you have had. So that underwriting happens, and we can come back with an indicative thing, but it's dependent on your own proposal form that your premium emerges.
Yeah, certainly. Okay, thank you.
So I am Manoranjan.
I just want to add one more point that there is a full limit of indemnity that you choose. Now there are various sections under the policy, and each section, depending on what you ask for or what the insurance company is able to offer, there could be a limitation on each of the sections. In many of the sections, they will give full limit of indemnity available for that particular section. But it is quite possible that the insurance company also, depending on the exposure, may limit each section. So it will all depend on what is that you are asking for and how does the insurance company foresee that risk exposure, and then accordingly price it. So that's why Vijayalata has been continuously saying that it is very difficult to give you a price at this stage. But once we have some basic information, probably we can explore the market and give you some indicative price.
And the IT infrastructure has to be a robust one. That's very important. Yeah.
Okay.
I have a question here.
Thank you.
So, like, supposingly, some cyber attack has happened on some institution or organization. Does that policy covers the current losses, or it's also there are some losses which are you cannot foresee it, right? It may, you may I think you may realize in future also that this happened to us due to that attack. So does that policy covers the present losses or the future losses as well?
No, present losses are certainly covered. Suppose some cyber event has happened and there is some hacker who is demanding bitcoins. So yes, certainly that is covered under the policy. And your future such incidents also will be covered under the policy.
No, I think my question is, not undoubtedly present losses are covered, right? But if there are some losses which happen due to the current attack, supposingly which are unforeseeable, right? Or supposingly some data lost, which could not be traced at the moment of evaluation by the insurance policy, right? In that case, what will be the support we'll get from the insurance company?
Usually the past attacks which are surfacing at this point of time, it will not be covered. The cover actually starts from the day we bind it, and whatever incidents happen during the course of the policy. So past attacks, generally they don't get covered.
Ma'am, I think I'm not able to make you understand what I'm asking. Supposingly on 1st of February 2022, which is your policy tenure, attack happened, and the insurance company has evaluated the losses that happened due to that attacks. But after 2-3 months, when your policy has expired or something has happened like that, but we found that there were another losses which happened due to that attack, which happened on 1st of Feb. So it means, does those losses which identified in the future are covered under this or not?
No, understood your question. See, generally when these policies are taken, since liability is there, liability policy, generally we call it a long tail policy, because some incident happens also immediately, it doesn't surface, it takes a slightly longer time. So cyber liability definitely is one of such policy. And as a broker, what we would advise is, if some client goes for it, it should be renewed continuously. Okay. Having said that, suppose for some reason a client has not renewed the policy, then there is a discovery period which is available under the policy. So whatever has happened, see, suppose your policy is from 1st January to 31st December, and after that it is not renewed. Then there is some attack which has happened on the 30th January, and you know about it on 15th of January. So the policy provides for a discovery period option, and in that discovery period option, you come to know of something, you have to intimate the insurance company, and it will be covered. And in many cases, some small periods are given, say 30 days, 60 days, some such period is given. If somebody wants a longer discovery period, in case the policy is not renewed, that also the insurance companies give, but they do charge some premium.
Retroactive also.
Yeah. And there is a retroactive period which is put in the policy, which is the first day on which you start the cover with the insurance company. Usually, in wherever retroactive is involved, it would be ideal to continue with the same insurer, because something related to this year could be there in the next year's policy also. In the subsequent year's policy also, this retroactive date will get captured. So whatever incidents have happened after this particular date will come under the scope of the policy. Is that clear?
Yeah, it's clear. Thank you.
Hi, good afternoon. Good afternoon. This is Atul Garg from Muthoot Microfinance. First, I want to congratulate everybody to organize such a good event. So my query is that there is always a cyber attack has two parts. One which is going to impact the total company, or it is mainly attributed due to the weak infrastructure security process of that company. The another event when it is because of the customer ignorance. So in this cyber liability policy will cover both parts. That is the one query. Second query: what about this regulatory losses? It may in the past certain events happens when regulator has actually directed the institution to stop that one particular business line because of some cyber security lapses or non-availability of the system. Or it is going to cover that part also?
Yeah. See, the attack, the first I'll go in the same order. The attack could be your system gets impacted due to some cyber rogue who's operating from somewhere, and then your system gets impacted. You lose a lot of third-party data available with you, and it gives rise to a lot of expenses. That kind of attack is covered, and there is another kind of attack where your system is used as a launch pad. So that type, the second type of attack is also covered under this particular policy. Does that answer your first question?
Yeah, but what about the customer ignorance? For example, phishing is there. So customer can maybe deluded by that phishing attacks and may have some financial or reputation loss.
Third-party liability is certainly covered under the policy, and in this thing, as far as financial institutions are concerned, you will be holding a lot of personal PII, personally identifiable information, as well as corporate information, and both will be covered. And the second question was about the administrator's fines. That also is certainly covered.
So even the customer, whatever financial losses customers has incurred because of his or her ignorance.
Policy.
Okay. Thank you.
Yeah. Yeah.
One question on whether you have any personal liability insurance cover, like see individual persons ke liye you have cyber cover?
Yes, we do have, yes.
Like Facebook attacks, then other media attacks and other things?
Yeah.
Yes, and more importantly, the mobile phone suppose this thing you use some app and somebody this thing hacks, and then such policies are also there.
But those policies actually based on the this, rigidity and the the security measures of that IT architecture. What are the security things are there, and how much IT architecture, underlying architecture is secured, right?
No, I think you're talking about the retail cyber. I think Mr. Atul, I think Mr. Bhatt's question was on retail cyber, whether that's allowed, that's available. So that is also available. So in fact, we have been instrumental in launching one of the first set of retail cyber products in the market. So where for lending institutions, you attach it with the member loans that you distribute. It comes at a very low cost, and it takes care of all the things by which they'll suffer a financial loss. The phishing, wishing, all the things get covered.
Okay, thanks.
Any other questions?
I do think that we have enough questions and enough interest from our members to understand the product and probably taking it forward.
Sure. So this, like in the slides, we have covered some more details which goes into actual contractual language. This is more for an indication so that you understand under each of the headings what actually gets covered in the policy document. So after this session, I'll send it across to the Sa-Dhan team, and you can go through the details. And if there are further questions, we are happy to get into another round of session. So to take the discussion forward, there are a couple of things which we will be requiring. So in addition to a mandate letter to seek terms, competitive terms from the market, we'll require the filled and signed proposal form and company financials annual report and any other information that the panel of insurers will be asking basis going through your proposal form. And KMD will get involved not just at the time of placing the policy, but also when you have to make a claim, so that you have our technical team getting involved to support you at the time of any loss or claim as well. So,
Gopti, please add this thing, IT philosophy of the company for cyber policy, and there will be a ransom questionnaire which they will have to share.
Yeah, so the proposal forms I'll be including the ransomware questionnaire as well, so that depending on how the companies want to take it, we can have conversations. I think Cyber and team are planning to facilitate that. So this is something which we thought will be a good start. So I'll take a pause here. Cyber, you have anything else that you want us to do?
I think we have a good discussion on these two proposals, and we could understand that there are, there are certain areas we need to work a bit more, and there are certain queries we have to address. And having said so, otherwise, I don't think I do have any other questions, and probably our members do have any other questions on these two products, basically. Now it is to take it forward.
And even after this discussion, if there is anything that comes to your mind, please feel free. You can approach any of us, and we will be more than happy to answer those questions.
Yes. So what I'll do once Gomati sends it to us, I will tell Sunita to circulate amongst the members and get the responses from them if there is any query or anything.
Yeah, so Cyber, two more points which I thought I'll just add basis the questions which came up. I think especially on the cyber, it's important once the attack happens, what are the next steps which follow? So there is a clearly drawn out process which gets implemented. Probably that understanding will help. So we'll probably put it as a documentation, send it across to you. And since there has been some interest in the retail cyber as well, we can probably send a small note around that. That's something which I thought. And since we have the audience and we normally do a lot of product development based support for our clients. So since all of you are already involved in various products, we were just checking whether there will be interest for a managed care product, which we have currently developed with a oncology tech platform, which is like a very sensible product for your members. So that is something again which we thought will be relevant to many of you. So it doesn't mimic any of the products you're currently distributing, say a Hospicash or a Mediclaim kind of products. It's a very different structure which focuses on cancer and comes up with a very cost-effective solution. So that is something which we thought we really wanted to pitch it to all of you and see whether there is interest. So I'll take a pause here. So Saibal, happy to be guided by you.
Yeah, it's fine. I mean, if you want to put a slide on it and have a quick like discussion on it. Discussion means if you can just put the slide and discuss, what do you call it? Like talk about it in a very brief way, we can.
Sure.
Gomati, with your kind permission, can I leave? I have another meeting lined up.
Sure. Thanks.
Thank you very much. The participation was really fantastic, and the queries were very interesting. Thank you. Thanks for the opportunity.
Thank you very much.
So this is a new product which we have developed with Karkinos Healthcare. So I think many of you would be knowing Venkat, who used to be the managing trustee in Tata Trust before he founded this company. So we very closely work with him on. We have created the first managed care product for cancer. So the Karkinos is a technology oncology platform which takes care of the entire thing when it comes to cancer. In cancer, one important thing is earlier you detect the chances of the person coming out of cancer is very high. For example, in things like cervical or breast cancer, if the person is detected in stage 1, then 95% chances that they will recover. Vis-a-vis stage 3, where there is a 5% recovery chance. Here, what we have done is we have come up with this something called Cancer Suraksha Program. So the way what it covers is it takes care of the. I'll be circulating this document. What it does is it takes care of the screening part. It takes care of they do something called health risk assessment, and basis that they are able to identify whether in the next 5 years someone will have cancer or not. And in case they have cancer, the treatment cost is covered with a 5 lakh inpatient insurance. So this is something which can come at a cost of something as low as 60 or 70 rupees a month, with the distributors also getting a distribution margin on that. So this is something which we have seen a lot of traction in the market. So I thought if there is interest in this, we are happy to get involved with the concerned institution and take it forward.
Okay, thank you very much. So what I could understand from the discussion that there are 4 things we have to work a little bit more. One is like the indemnity structure. Second one is the process. Third one is the coverage. And fourth one is the documentation side. So these are the 4 things probably we have to work a bit more. And we can, in between, we can always circulate your document to our members, the participants, and take it forward from there. So it's a good meeting. Actually, it's a new kind of thing, comparatively new kind of thing. And maybe a couple of institutions who are lenders, they may like this investing institutions to be taking this kind of insurance to protect the institution and also to protect their portfolio. So this is, I mean, it's a very positive sign the way our members, they have come forward and asking the question. Having said so, and for this closing remark, I would request Mr. Satish to conclude the.
I don't have any closing remarks. I think it was a good presentation by Gomati and her colleagues. There's a lot of interesting insights, and based on the discussion, I can say that it has given rise to a lot of interest in our member institutions. And now the next step would be that whatever communication which we will be getting from Mrs. Kim, the store, that in detail we will be circulating to the member institutions, and then I think based on the interest and all, we expect at least a good number of our member institutions to fruitfully engage in some of these, taking some of these products forward, because as you must have seen during the discussion, that though being in the financial sector, some knowledge is there, but detailed knowledge about the products and the intricacies of the coverage which the institutions can benefit from, that is absent. So to some extent, a lot of information we got on the coverage and all, especially when we see in terms of as you may be saying that now, even when the institutions would like to request eminent persons to become independent directors, there is a lot of hesitation as to what exactly is going to happen in the institution and all. Though many of them would like to come and contribute to the sector, because microfinance sector as it is helping the poorest of the poor, especially the women. But still there are always a lot of lingering doubts in the background, especially of the eminent people who would like to come in as independent directors and all. That's something. Then otherwise, then even for the directors and KMPs, there are a lot of issues of governance failures and risk on account of cyber attacks and cyber warfare. And sometimes, as we have been seeing in the financial press, some of these ghosts are haunting the people even after the retirement. So I think to some extent, these are the products I think which institutions should look forward to. I hope this would have been a good preliminary, what we can say, opening up of the windows for our microfinance sector. They will be in touch with us and our team, and they will be in touch with Mrs. KM Dastur, so that the institutions which want to take up these products and all, we can work out a way forward for them. And thank you for the very good and very informative presentation, and the good clarification of the doubts and questions raised by our member institutions. Thank you.
Thank you very much. Thank you very much, Gomti. Thank you all.
Thanks a lot, everyone, for the opportunity. We look forward to taking it forward.
Right.
Thanks.
We are also. Thank you very much.
Good day to all. Thank you.
Thank you.